Good morning. Welcome to Forex In Four. Today is Thursday, September 21st, 2011. All right, what do we have going on here? Markets are tanking around the globe. Primary reason is Operation Twist, which was launched by Bernanke yesterday. Perhaps he should have called it Operation Spiral, as in death spiral, and what he's causing to the markets here. You can see that there's major risk aversion going on. We're looking at 15-minute chart of Euro USD. All right, boom, here's the announcement yesterday. We were pushing up around 138. He announces Operation Twist, and boom, we've got this massive sell-off, close to 4 cents here, down to just above that 134 level. All right, so what does all this mean for the markets? Well, we got a couple things going on. All right, first is that people were largely expecting Operation Twist to happen, and the more I hear about this, these market operations, the less sense it makes. I mean, this guy is like tinkering. He's like a mad scientist. He keeps puttering and meddling and doing all this stuff with monetary policy that a friend of mine used to say, the enemy of the good is the better, and it looks like that's exactly what Bernanke's doing. So Operation Twist, the idea is that they're going to take these short-term notes, sell them, and now buy longer-term, keep yields low for an extended period of time. Well, what that essentially has done is that's caused dollar strengthening, and we know about the correlations in the market. When dollar strengthens, you got stocks selling off, you got commodities selling off, which it's not a horrible thing if you look at it from an inflationary perspective. All right, we've got oil. Let's take a look here at oil. Boom, oil's trading down, I think, an 81 handle right now. All right, touched 81 handle. We're just above 82. All right, we've got gold selling off about 50 bucks, thereabouts. All right, gold's back down to just about 1750. All right, these aren't bad things, and dollar strength is not a bad thing by any means. All right, but in the short term, all right, you got to look at the impact that it's having on the other markets. And when we look at the euro, all right, we've got a couple things happening in the eurozone. I'm just going to flip back here. These are all 15-minute charts I'm looking at. All right, when we go back to the euro, we know about the problems that they have over there with the Greek debt crisis and how Greeks trying to scrap together the austerity measures and get the support necessary to receive the next tranche of bailout money. But it's looking more and more unlikely that even if they get that bailout money, that they're going to be able to avoid default. And then the other thing is that they just had their PMI figures come out this morning for manufacturing. All right, it's the first time European manufacturing has contracted in over 2 years. So the global economic picture is not looking good. Now, back to Bernanke yesterday in Operation Twist. All right, the idea is that he's buying longer-term maturities to keep rates low for an extended period of time. Well, part of that is it's sort of the idea is he's forcing people out of long-term investments, trying to get them to buy other things. And when you try and engineer the markets like that, they don't react favorably. All right. He also mentioned yesterday that this is probably a long time coming, but yes, indeed, that the global economic picture is weakening. Okay, the numbers here in the U.S. is weakening. All right, and he's running out of bullets. And now it's like he's just firing anything in the air he can find. So Operation Twist, I'm going to dub Operation Disaster. Okay, because that's what it's doing in the markets. Now, obviously, we know that we need to take care of the fiscal side of the ledger, but the part of the problem here is that we need to restore confidence. All right, whether it's to the economy, whether it's to markets, whether it's just to people in general. And how do you do that? Well, I mean, I don't even know where to begin right now, because at this point, if the markets continue to tank like this, people are going to say, hey, wait a second, we need fiscal stimulus. That means more money. Let's pile on more debt. So it's starting to get crazy, folks, and I don't even know what the answer is going to be at this point. But you can see here we've got euros selling off. We got Aussie, which I believe is now below parity with USD. Oh wow, yeah, big sell-off on Aussie. Why'd that happen? Well, Asian markets took it on the chin overnight. All right, we had stock indices down. We've got Europe down. European stocks are down around 5%. U.S. futures set to open lower. So big move lower in the euro. Or excuse me, in the Aussie. I'll show you dollar CAD here. All right, yesterday. Now, I don't know if you folks follow the chart of the day that I also do here at Forex News, but just yesterday I gave this one up at about 99.5 cents, calling for a 101 move overnight, and boom, that happened and then some. So we're up at 103 right now with dollar strength, and if you're looking at for trading ideas and things like that, by all means check out this chart of the day deal, because not only I have that one, all right, I called 2 days ago, I called the pound here down to 155 as well. So you can see that there's going to be times when you can certainly take advantage of some of the moves that are happening. Sometimes it just seems, I don't want to call it too easy, but when these things are telegraphed like this, you sort of know what's going to happen. But so we've got dollar strength. All right, everything's down, pound down, euro down, Aussie down, Canada down. Let's take a look. I want to look at Euro Swissy, see if that's done anything. All right, they're still holding up above above that 120 area where they've drawn the line in the sand. That's interesting. Let's take a look at dollar yen here. All right, dollar did strengthen initially out of the gate, but now selling back off, and we're approaching that 76 level. I mean, if we get down to that 76 level soon, all right, there's talk of that Japanese intervention may be forthcoming. So we're going to have to see what happens with that. But it's interesting because dollar yen's near lows, but let's look at, like, say, euro yen, for example. Okay, and euro yen just keeps making new lows, and I believe we're going to see the same thing with pound yen as well. Yep, pound yen as well keeps making new lows. So it'll be interesting to see what they do over in Japan, if they have any inkling. But the situation is not pretty, folks. And how the long-term effects are going to turn out is also interesting. Now, by forcing people out of longer-term maturity treasuries, all right, they're hoping that they jump into stocks and commodities and all these other things and get some inflation. But I think right now fear is too great because of what's going on in the Eurozone, all right, because of what's happening in the global economy. And then we've also got Bernanke, just keeps tinkering and keeps tinkering and keeps tinkering. And eventually, I think this move, the markets are saying, hey, enough is enough here. You got to stop, because it's not making a whole heck of a lot of sense to tank the markets like this for very little outcome. And okay, sure, you want to lower maturities later because maybe the government can borrow more debt, but if there's no political will to do it, it doesn't make any sense. So what's going on the rest of the day here? We've got U.S. initial jobless claims expected, another 420,000. Okay, and that's really it. We've got some home price index and U.S. Leading indicators. All right, those are expected to come in lower. Eurozone consumer confidence also expected to come in lower. And all in all, it just looks like the markets are just taking it on the chin, and there's really no end in sight here. And it's the kind of thing where, until Europe gets their act together, figures it out, until we come up with something here in the U.S. All right, it's tough to step in and to buy stocks or buy commodities at these levels. Even with this lower rate, I mean, I think people are jumping into the short-term stuff now, and that's causing dollar strength. So what it's gonna take to reverse this is anybody's guess at this point. But right now, not a rosy picture. I don't see anything on the docket either today or tomorrow that's going to change any of this sentiment. All right, not to mention we got global politics picking up now with Palestine's application to the UN. Who knows what that's going to do? And sometimes when things sort of come to a head, it's like you just pile on all this stuff to see what's happening. So right now we've got just massive risk aversion in the markets, and there's really not a whole heck of a lot more to say about it. All right, gold, commodities, oil selling off, stocks, futures way down. We can look at S&P here. S&P down to 1130 area. This 1160 area had been a little bit of support, but didn't really hold. But you can see, selling started yesterday afternoon and has continued right overnight, and that's sort of how these cycles go. So can we break out of this cycle today? Sure, we can get a bounce here in the U.S. All right. Maybe they come out and say things aren't as bad as they seem, and now everyone says, well, wait a sec, we got to start buying stocks now because we can't buy bonds at these levels, and let's pick up some dividend-paying stocks, which would be good for the Dow and S&P. Okay, and they're probably getting much better yields right now on dividend plays, but by and large, there's still a major economic crisis going on, not just here in the U.S. But around the globe. And until politicians can get their act together, it's going to be more of the same for a while. So, at this point, I'm not inclined to jump on and start selling everything here down near the bottoms. If anything, I'm looking for a bounce. But we do not have a trend change at this point. So I'm guessing that the overall trend is going to be lower for some time until perhaps we hear something out of Europe telling us that Greece is fixed. So that's what I've got for today, folks. Good trading to all.